Welcome to the Hirschberg Entrepreneurship Institute's webinar series, Yes We Can, Perspectives and Strategies for Success in 2021. We will begin the webinar in about 5 minutes. Thank you for joining us. We will begin the webinar in about 3 minutes. Thank you for joining us. We will begin the webinar in about 1 minute. Thank you for joining us. We're happy to show the webinar to you. In this webinar, we'll be utilizing the chat and the Q&A functions at the bottom of your screen. If you would like to ask questions of our panelists, please put it in the Q&A. Just click on the button on the bottom of the window and a window will pop up. Type your question on the bottom here, hit send, and your question will be seen by the panelists. We'll also encourage you to keep the chat window open. We'll be putting some links in there for information about our speakers and other things. If you do have some technical issues, you can send a chat there, but please use the Q&A for your questions of the panelists. And before we get started, we'd like to launch a couple of polls. First of all, when do you think the pandemic will largely be behind us? Sometime in 2021 or sometime in 2022? So go ahead and see if you can predict when you think the pandemic will be over. Boy, we're getting a lot of votes coming in. Any more votes? Okay, so it looks like people are thinking probably about this time next year. Great, we have another poll coming up. This time is, how has COVID affected your business? Has it grown faster? Do you think it's declined or about the same trajectory? Boy, there's a lot of, it looks pretty evenly matched there. So there's our response there. So that's kind of some interesting food for thought there for Bob. Well, thank you very much for answering. And now I'd like to just introduce Gary Hirschberg for the Hirschberg Entrepreneurship Institute.
Okay, thanks, Carlene. Hi, everybody. Welcome to the first of our, I want to call it spring, but I guess officially winter webinar series. As many of you know, we had a terrific series last spring, and as 2020 was coming to an end, I got lots and lots of questions from folks asking if we were going to resume, and so here we are. Just to reiterate, since a bunch of people joined after Carlene's initial announcement, the course of this seminar and all of them, we will have the speaker speak, we'll have the moderators ask them some questions, but then we will go to your Q&A. So please use the Q&A function, go ahead and put those in. And of course, we'll keep the chat open. We'll probably have some references and links. You may want to communicate with each other as well, but again, for our purposes, let's use the Q&A. Obviously, it's a momentous day for all of us here in this country, and I think the world, and certainly it's timely that we would be taking a forward look at 2021 right now, given what's going on in our nation's capital. Joining me today is Elliot Began, who is a regular now at the Hirschberg Entrepreneurship Institute. Elliot's the founder of the Intertwine Group. It's a consulting practice that's focused on helping emerging food and beverage brands grow. He and his colleagues really help position CPG brands to raise capital, to improve velocity, gain distribution, drive revenue, and win, as they call it, share of stomach. Elliot is often speaking. He runs his own blogs and webinars as well. And welcome, Elliot. Glad to have you with us. And in a moment, I'll introduce Bob. Let me just say, also by way of introduction, I really appreciate New Hope Network's participation with us. Obviously, given the COVID environment, New Hope is in a kind of a dynamic place. They will be announcing their plans for Expo West shortly, but in the meanwhile, there's an awful lot of educational activity going on, and we're really proud and pleased that we're in their roster and their portfolio of offerings as we all try to contribute to people being successful in this crazy environment that we're in. I referenced and want to make reference again to the Hirschberg Entrepreneurship Institute. At the moment, we are scheduled for April 28th, April 29th, and April 30th. It will be virtual, we'll be online. It'll be our third consecutive virtual institute. And you'll be seeing Bob and Elliot and many, many other fantastic presenters and panelists there. And of course, I want to remind you that there's lots of opportunities to submit your own pitches for both business advice and also for fundraising. And finally, speaking of fundraising, for those who are not on the Hirschberg Entrepreneurship Institute list, you can actually place your pitch onto our site right now. We have a portal. We have about 50 plus investors who are alerted when new pitches are posted. And this is our way of keeping the opportunity to get yourself introduced to investors live and timely with your own needs, as opposed to waiting for our spring or fall institute. So check that out if you will. And again, that's at hirschberginstitute.org or .com, sorry. Now, Bob. Bob, as a lot of folks know, and I worked together in the very early going at Stonyfield for 11 years. Bob led our sales and marketing efforts, really got us off the ground and on the map. And Subsequently, over the last decades, Bob has, I can't even think of a natural foods company that Bob hasn't had something to do with. He's been an extraordinary consultant since the late 90s, sometimes acting as a CEO, often serving literally on the board of directors, as he does currently for Ecofish, Saffron Road, Halsa, Oat Yogurt, Uncle Matt's Organic, Cauliflower Foods, and King Arthur Baking. He's on lots of advisory boards. He has his own private consulting and advising practice. And of course, Bob also runs full-day seminars and networking events on becoming a more effective sales manager and financing your natural and specialty products company. He's really been just a real mensch, a real go-to guy for our industry. Having the experience of being a part of a struggling startup, which Stonyfield was for most of his first 11 years, having nothing to do with Bob. Bob has seen, kind of the worst challenges out there, and he's counseled and held the hand of ever so many. And so I think it's really especially appropriate that we, as our kind of advisor, philosopher, coach for our sector, that we kick off our institute, our webinars with Bob and perspectives on setting goals in this truly crazy 2021 environment. So without further ado, we'll go to Bob, and don't forget, get your questions into the Q&A. Bob, floor is yours. You're muted. Gotta unmute you. There you go.
There
You're
we
on.
go. And Carlene is going to put up the presentation. And while I'm waiting for that, I'll just say, thanks, Gary. I really appreciate it. And as many of you know, I've had the great good fortune to work with a wide variety of companies across many sizes, stages, categories, classes of trade, channels, and it's really provided me with terrific perspective. And certainly I've worked with a number of international companies as well as the ones whose boards I'm on. And, before one can prognosticate, one has to have a context. And let me just change this. There we go. And so if we could hit next, and we'll skip over this, thanks to Gary. And so, one of the biggest factors, one of the biggest drivers that's going to inform almost everything we talk about is, when do we think we're going to get on top of the pandemic? And having sort of read widely on the topic and referred to a number of studies, industry sources, et cetera, it seems like the punchline or the consensus is sometime in Q3 or Q4 of this year. Now, obviously, some of the key factors are going to be whether we can have an effective distribution of the vaccine, as well as widespread adoption. Will there be easy access to rapid, accurate testing, which there hasn't been so far? And then, of course, effective therapies, in the realm of the monoclonal antibodies, such as the president and his inner circle got, but weren't widely available to the rest of the population. And so those are going to be essential. If we take the optimistic view, if we can pair this with effective public health measures, so things like wearing masks, distancing, good modeling by leaders, then we'll get a positive sort of synergistic effect, and we might be able to come out of this as early as Q2. So next. So we're in a so-called K-shaped recovery. If you're not familiar with that, it essentially means that there's a lot of folks who have jobs, who are invested in the stock market, have retirement accounts with IRAs and 401ks, et cetera, who are doing quite well. There's this weird disconnect between the stock market and the economy at large. And then sadly, a lot of folks, depending on their industry, have been absolutely devastated by this. So people who work in food service, travel, events, many industries adversely affected, and a lot of people challenged in terms of needing to, pay rent, pay bills, buy food. And while we've had a number of relief packages, and hopefully there'll be another one forthcoming, at some point we're going to have to pay the piper. And so unless we can grow our way out of this, we could be setting ourselves up for some inflation, which can have its own set of consequences that might be, coming in the foreseeable future. Unfortunately, there'll be more restaurants going out of business. Many life events have been interrupted: weddings, funerals, graduations, bar mitzvahs of all kinds. And not only does this have an economic impact for those businesses that support them, but there's a big emotional cost as well. And that's hanging over us as well. And so more will be around reduced, long-term reduction in business travel. Let's face it, not many of us are going to be traveling across the country for a 20-minute Sprouts appointment going forward. And so what are those implications besides the impact on the airline industry, hotels, restaurants, rideshare companies, and even business apparel? So there's going to be second and third order consequences to all of these assumptions that we have. There's going to be a meaningful number of people still working from home and homeschooling. We'll talk about that shortly. And then related to all that is the greater percentage of food consumed at home versus away from home. And so we hear $1 trillion being batted around a lot lately, especially with relief packages. It's a hard concept to wrap our heads around, but the market for food and beverages in the US is over $1 trillion. And historically, it's been 51, 49, 49, 51, depending on what's going on in the macroeconomy. Well, back in April and May, it might have been 70-30 or 80-20, according to Credit Suisse. It may settle in at 55-45 or 60-40, with the larger percentage being at home. Each percentage point is tens of billions of dollars that's going to be happening on e-comm and retail at the expense of on-premise or away from home. So let that sink in and think about how that might affect a lot of our businesses. And then evidently the COVID-15 is real. According to WebMD, the quarantine diet is more sugar, more carbs, more alcohol. So if you're selling Pelotons, if you're offering low sugar, low carb products, if you're in the keto business, all good. And it'll be interesting to see how people start to transition out of this as far as lifestyle. Next, please. So there's been this so-called flight to suburbs. New York and San Francisco rents are supposedly plummeting from the stratosphere to the troposphere. There's an even greater impact on commercial and office real estate as companies really rethink where they need to be based, who needs to be in the office, how much space do they need, and then of course, what's that impact on all the businesses that serve them? Cafes, coffee bars, restaurants, caterers, messenger services, all are going to be impacted by this. And no time better than a pandemic to have a heightened interest in health and wellness and immunity. So healthy foods in general, organics specifically, but also all the subcategories around adaptogenic herbs, probiotics, vitamin supplements, and foods and other products that boost immunity that might help you mitigate this if you get it, or avoid it altogether and just have a keen interest in health, something that all of us, many of us, take for granted until something like this happens. I'll talk a lot more as we go through this around the challenge for brands to get discovery at retail, but that's going to continue to be a challenge. And then so-called conscious consumption rising. All of us have all the knowledge of the world in our pockets. and consumers are much more tuned in to the values of the companies they support. What are they doing around sustainable sourcing? What are they doing around climate change? What are they doing around diversity? What are they doing about ethical sourcing and voting with their dollars? And sadly, it's still a very divisive political climate. And even, with the muting of he who shall not be named on social media and that lowering the temperature somewhat, it's still going to be interesting to see where this goes in terms of impeachment, in terms of whether he continues to be a disruptive force, and will the new administration be able to take this fresh approach to tackling our serious problems, or is there going to be continued gridlock and the amplification of just toxic, polarizing discourse on cable and social? Next. And so this isn't new, and you've heard this expressed probably half a dozen ways, but there's something like 10 years worth of acceleration in 10 months in terms of groceries being sold on e-commerce. For most consumers, there's this seamless integration between e-comm and in-store shopping. And I can't quite place it, but I read something recently about the consumer continuum and how consumers can intersect with their brand in multiple ways. Hang on, was that Elliot's talk from yesterday on TikToks? All of you listening should be subscribing to that if you're not. Full of great insights. And that was one of them yesterday that I absolutely agree with. Ongoing focus on click and collect and home delivery, and a lot of it is with new consumers. A huge percentage of people who are either getting Instacart or doing curbside pickup are either boomers, Gen Y, or people who otherwise wouldn't have dreamed of having their groceries delivered to their homes, but are now doing it out of necessity. And that's going to stay with us for a lot longer. For all of us in the business of trying to sell products, there's going to be some continued hangover around irregular category reviews. And while retailers all talk about being interested in innovation, they still want to keep the shelves full. They're still thinking in terms of 80-20, in terms of streamlining assortment, and knowing the economic hardship out there, want to make sure that suppliers are focused on offering value. So continuing to promote, although it's been a little lumpy, as well as, emphasize private label, which is what some of the e-comm people are doing, as well as all of the grocers. And so going through all this, we've all been forced to have a deep understanding of our supply chain. Where are the bottlenecks? Where are the points of vulnerability? And how can we fix that? And how can we get ahead of it? And how can we carry that forward? And then, needless to say, as a society, there's been a much greater awareness around DEI issues. And so starting with George Floyd and Breonna Taylor and Black Lives Matter, consumers, society, companies are tuned into this. In our industry, a lot of you may have heard of the JEDI Collaborative, standing for Justice, Equity, Diversity, Inclusion. There's a terrific initiative called Project Potluck, where BIPOC founders are mentoring BIPOC entrepreneurs along with others. And so a lot of progress, but a long way to go. Next, please. And again, this is at this point a little bit old hat, but consumers have really changed their shopping behavior going into bricks and mortar, fewer trips, bigger baskets, shopping from list. Another factor making discovery that much more challenging. People aren't dwelling in stores. It's get in and get out as fast as they can. They're not lingering. They're not looking for what's new. And they're just moving off of their list. And then in terms of working and schooling from home, it's stressful. my wife and I are in that proverbial empty nesterhood. Thank goodness for us, but we really understand and empathize with all those folks working from home, trying to do schooling at home, having 4 people, 5 people, whatever your situation is under one roof, having good internet. It's just daily life is a challenge, and it's really causing a lot of residual stress, along with the, how do we get through having meals, getting kids for school, having some semblance of a social life. So those categories, anything to do with cooking at home, baking at home, alcohol. You may have heard that baking has replaced baseball as America's pastime. People have named their sourdough starter and treating it like a well-loved family pet. And conversely, there have been those categories that have been affected by mobility, which have seen declines, things like bars, gum, mints, deodorant, others. And so winners and losers in every crisis, if you will. There's been more integration with the smart home with shopping. So people integrating their Echo, their Google Nest, Siri with reordering, with getting fulfillment, Amazon Prime, et cetera. And then we've all adapted rapidly to virtual meetings, right? So even though there's Zoom fatigue, without that, to enable companies continuing to function, education to continuing to function, we'd be even more challenged if we were relying on some of the legacy platforms out there. So this has really been an enabler in a really positive way. And then there are these so-called dark stores that are dedicated to fulfillment, which hopefully aren't happening in food deserts, but they're out there, and it just shows how retailers are adapting to this new reality and how they're rethinking and reconfiguring their business model to accommodate far more business in the way of home delivery, curbside pickup, and e-commerce. Next. So this is where we stand back and say, what's our COVID exit strategy, right? We've all been through a lot of change. We've all seen the world transform before our eyes. And so what initiatives are we going to be betting on that are going to take us into this future new reality? And by bet on, it means invest in people, programs, as well as what things are we going to step away from? And so I'm going to frame up this next section as the what and the so what. Next. So in terms of resolutions, this is me being Captain Obvious. Amazon, Thrive, E-Comm, direct-to-consumer are here to stay, and they're only going to get bigger as every quarter goes by. And so they're going to be an essential part of your mix, whether you're doing refrigerated, frozen, ambient, no matter what category you're in. If you're not devoting more resources to optimizing E-Comm and DTC, this is the wake-up call. You need to jump in with both feet, right? And as I said before, people aren't stopping to shop. They're shopping all the time. And so really think about this holistically. It's all about omni-channel, and you need to embrace it and optimize it and understand, what are your competitors doing? What are your peers doing? Try to learn from them. Try to accelerate this. It's a very big priority. And closely behind that is, how are you engaging with the consumer? And if you're not optimizing social media, digital marketing, influencer, get help. There's so much great help out there. And this really helps you go up the learning curve more efficiently and make use of these resources to make sure you're doing everything you can, no matter what you have to spend and invest against this. Likewise, understand Instacart, understand the retailer's own e-comm platform, whether it's Target.com, Costco, Walmart.com, even REI, everyone's doing it. You want to engage with it. And then in a world where there are no in-store demos, where promotions have been disrupted from time to time, how do you get trial and discovery? Well, there are some digital couponing like Ibotta and Inmar and others. And there's a new platform called socialnature.com. And the founder, CEO, Analea, is going to be on with Jessica from New Hope sometime in February. So look at that and understand what's available to try to help with this trial issue. So many brands have benefited with this surge in demand. How do you capitalize on that? And so with this windfall of trial, in terms of you might have been the last item on the shelf, or the whole category is up 20, 30%, how do you keep this business? And so what are you going to do about amplifying your message to these consumers, optimizing what's on your website, social media, email marketing, and try to engage with them and keep them, subscription programs, whatever's within your ability. And when I talked about DEI earlier, this whole next section is about deeds, not words. And so back when some of you remember there was a Blackout Tuesday where companies abstained from social media and tried to put uplifting and promising positive messages about social issues on their site, there was equal dialogue about, where are they going to be 2 months from now, 6 months from now, a year from now? Take action. And so think about your team, think about diversity on your boards, what consumer segments are you serving, and how can you broaden all that to be more inclusive? And likewise, climate change is absolutely at a crisis. And so what are you doing around climate change? What are you doing around regenerative ag, sustainability issues? Some of you may know Gary's sister Nancy was a co-founder in the Climate Collaborative. That's a good group. A lot of companies who are doing food are looking at, can they move beyond organics to more restorative practices like regenerative ag? So not just the absence of inputs upstream, but what are you doing for soil health and reducing carbon? And think about that end to end throughout your supply chain. And then what does your company stand for? What does your brand stand for? And importantly, how do you live that? So I have the privilege, as Gary mentioned, of being on the board of King Arthur Baking. They're one of the oldest and original B corporations. For those of you not familiar, a B Corp is a benefit corp where it really tries to value like a 360-degree look at your business, not just financial performance, but how do you engage with the environment, the community, suppliers, employees, and so on. And so a company like King Arthur really looks at all major decisions through a B Corp lens so that they're really living their values, and it's not about photo ops or optics or anything else that's superficial in the name of marketing. Next. And so because this is going to be somewhat of a lumpy recovery, because there might be another surge in COVID infections and lockdowns and all of that, distributors and retailers are absolutely expecting and demanding suppliers be flexible. And that means going long on inventory, on critical raw materials, finished goods, as well as just throwing out your minimum order quantities when it comes to delivery terms and conditions and all of that, to be as flexible as possible. You're going to overspend here, you're going to overinvest here, but it's better than the opposite, which is being out of stock. A lot of us learned a lot about our businesses last year. There's the old adage of when the tide goes out, it exposes all the rocks. And think about, where were your rocks and what still needs to be improved, and what new improved practices are we going to carry forward so we have a healthier business going forward. And still, for now, we do have to think about 80-20 in terms of streamlining our product mix to really make sure our best-selling, core items are available, just like the retailers cut back a bit on assortment. And all of the disciplines we've instilled throughout our supply chain, trade spending, cash management, they're always important, but ever more important going through what we're going through now. Again, being mindful, at least in my view, and the apparent consensus, that we're probably going to be doing this for most of 2021. So not a time to let up and relax at all. And for a long time, there was this sort of ethos of grow, grow, grow. We'll have this Hail Mary unicorn exit at some irrational valuation, and everything falls into place, no matter how much money we've lost in the last 5 years. Well, that's been kind of tossed out the window, and investors, strategics, and others really prize companies who are being capital efficient. So those who have healthy gross margins, who are disciplined about spending, getting to cash flow positive, and really making thoughtful, intentional investments around distribution, trade programs, consumer programs, staffing, and so on. Next. And needless to say, as we've all changed and the world has changed, never a better time to stop thinking about, well, we're doing it this way because we've always done it this way. You know, the old world is essentially slipped behind us. And related to that, while a lot of people are eager to get back to in-person interactions, whether it be events or working in socializing with a group, and there's a lot of benefits to that. There's that magic of the in-person discussions, relationship building, and all of that. As leaders in your companies, think about how can you pull your team out of the day-to-day if they're working remotely, and maybe do a day on brainstorming. Do the virtual town hall meeting, have celebrations, really be mindful of sustaining and building culture during a very challenging period where you don't have that in-person interaction. And I sorry to be repetitive, it's just so important, is be prepared to make those investments, which means tying up cash, which is dear, in raw materials, finished goods, and having higher transportation costs. I mean, look at the holiday period where Amazon, the Postal Service, everything was delayed, not just because of taking out all those sorting machines, but just elevated demand, whether it was absentee and voting by mail, but just the hugely elevated e-commerce during the holiday period. We're going to have more of that as we go forward. And then be where the shoppers are. And right now, the shoppers are at E-Comm, they're on E-Comm, they're in Amazon, and then Target, Costco, Walmart, dollar stores, and of course, premium retail. Next. We do have this light at the end of the tunnel. There was this ebullience around the vaccine and a lot of hope, but we have to stay vigilant. We can't let up our guard. We have to keep up with masks, distancing, hygiene, whether you're in the office from time to time or in your plant. And because of that, if you're running your own plant or if you're working with a co-man, you have to understand, what might cripple you if somebody is sidelined. And so you have to do extensive cross-training. And this applies in the office as well. Something as mundane as accounts payable, receivable, transportation manager, et cetera. How can people sub for anyone who might be out sick or have a family member out sick? We've got a long way to go, and we've got to stay on top of this. And with the new ways of engaging with consumers, certainly thinking in terms of an omni-channel way, and with everything we're doing in social, how do we get a deep understanding of our bullseye consumer, and how do we find more people like them? This is a time, again, we would want to do this anytime, but it's so essential to be doing this now, where you can really build this long-term emotional connection based on your deep understanding of who they are. Next. And so I have to acknowledge there's been, real suffering, death, illness, emotional distress, economic hardship. But for a lot of us in CPG, this has been a gift. And I don't mean record sales or a surge in demand, but it's really forced us to look at our business with fresh eyes and speed up, accelerate, understand, invest, and how do we adapt and show up in this new world of ours. And so clearly, everyone who's being thoughtful, everyone who has a COVID exit strategy, and really starts to apply some of this thinking along with all the other input you're getting from your board, advisory board, investors, peers, team members, et cetera, are going to come out of this much better, a much healthier company, much more in tune with where the world is going. Next. And so I'm not sure if anyone's ever heard of Alvin Toffler besides, let's say, folks of a certain age, but this is from 50 years ago. Best-selling book called Future Shock. The illiterate of the 21st century will not be those who cannot read or write, but those who cannot learn, unlearn, and relearn. And, never words more appropriate for right now. And next. And I think the future really looks bright, like looking at a solar eclipse without the requisite safety glasses. I can't help it. This always cracks me up. Next. That's my book. And next, questions. So this is where Elliot and Gary are going to ask easy underhand softball questions and not try to stump me.
Well, Bob, thank you. Thanks for I think, as I said before, it's a perfect way to kick off our series here. You've framed many of the issues that are going to be addressed in the coming weeks. Obviously, capital efficiency. How many more times can we say that? We have next week with Elliot, absolutely dedicated to ways of conserving and managing your cash. Couldn't agree more with you. From the 50 plus investors in the Hirschberg Institute cohort, they're all echoing. This is not the time to be focused on exclusive top line. This is the time to demonstrate efficiency, to show that you can run a business. They don't want to see bad habits that have been built in the sort of flagrant go ways that maybe many of us were engaged in maybe 5 to 10 years ago. They want to see real businesses, and they're just not going to even look at you if you're not engaging in efficiency. So I think that was really important. And I'm going to go ask you, Elliot, in a moment to comment and also offer some questions to Bob. But I want to just make mention of a couple of key themes that I think are on people's minds. And I want to frame my comments by underscoring, knowing a little bit, I went through the attendee list today, and I can see a pretty even split. And it's, by the way, Carlene, something we should poll for with upcoming webinars is sort of what stage are the businesses at. But I would say we have about half who are kind of what I'll call established. In other words, going into COVID, they had a certain amount of momentum, a certain shelf presence. And obviously it's been about trying to hold your own. A lot of SKU rationalization, which you've referred to, the 80-20. And then about half are what I'll call emerging, folks who were just getting off the dime, and who obviously, you mentioned the irregular category reviews, which is a euphemism because we all know it's totally chaos out there and they're very delayed. Lead times are terrifying. And of course, if you're a little guy, it's you don't have demos, you don't have a lot of the tools that you used to have to get it into people's mouths. So I ask us as we go on with the discussion to be mindful of that there's two different audiences here. But I wanted to just ask you something that really stuck out. I think your point post Trump, Black Lives Matters, diversity, climate, mission, social awareness coming to the forefront. There's a whole emerging consumer who's just simply not going to buy if you don't hit, some or another checkpoint. Can you comment, maybe even anecdotally, with any examples? You mentioned King Arthur, companies that have really been able to capitalize on their mission focus in any kind of concrete ways, whether through E-Comm or on shelf, because I think this is a wide open opportunity, and I think this is a case where mission may matter now more than it ever has.
Sure. I'll just give one recent example. And so, I can't say enough great things about King Arthur Baking, but one of their really clever initiatives that they had during COVID and is still going on is called For Goodness Bakes. And what they did was they would go to a number of, local bakeries all around the country, many of them owned by minority or women-owned entrepreneurs, where they would buy up all of their inventory and essentially then give it away to out-of-work restaurant workers, frontline healthcare workers, and others. So it really had, multiple levels of positive impact. And again, they've been prospering throughout all this. And so they had the intention as well as the means to be able to do something like that. And it was very clever. And they weren't, thumping their chests about it, but they'd share it out through social media and really try to get other people to think of clever, creative ways to help others as well.
Yeah, that's a great example. Another one is Orgain, which you and I were on the board of. I'm still there. Andrew and company, Andrea, came up with this really brilliant idea where people could nominate a healthcare hero to receive a care package. And of course, it's brilliant, right? It lands with people who absolutely need and deserve our gifts, our thanks. But also, of course, you get trial in an environment where people are stressed and stretched and so forth. Last thing before I go to you, Elliot, you mentioned value, but you're also mentioning, and in fact, even the retailers that you were mentioning, the sort of critical importance of value, but also there's mission. And I just wonder if you could drill down a little bit and give folks a little guidance here. I mean, is there a priority here? How do you coach people on?
Yeah, so I do believe, you have to be authentic. You have to live your values, or don't be talking about it. And at the same time, I know Gary and Elliot. I help facilitate a share group of about 25 manufacturers, mainly in New England and New York. And over the last year, we've had a number of retailers, distributors, and others as our guests. And they all are saying they're very mindful of offering value to their consumers, meaning even though there's unprecedented demand, they are fully aware that there's I think today there's about 7-8% unemployment. That's many millions of people. There's still a lot of hardship out there. They're trying to make these healthy, good products accessible to as many people as possible. And so for suppliers, we have to do what we're able to do, but that might mean promoting where we can. It might mean, not just sitting back saying, hey, look, sales are through the roof. Why should I, be doing these things right now?
Yeah, the retailers need our help in a
right
part. Yeah, Elliot, let me turn it to you. And folks, just to remind you, and I see a bunch of folks in the Q&A. We'll after we have a little bit more back and forth with us, we're going to go to try to get every single question here. So keep putting them in.
And thanks, Gary. This is the greatest gig of all, being sandwiched between our industry's Obi-Wan and Yoda, right? So it's not such a bad thing. And Bob, I was like ready to brutalize you with questions, but then you gave that nice plug, so I had to walk those back and think of some softer questions. But one that I think is so important, as you point out, that conservatively, we may still be in this kind of tough space until Q4 or later. Just tips, the things that people can walk away from this webinar from today and think about, what are some of the things that I can do to make sure that I'm well positioned to survive, to thrive, to make it through this.
Well, hopefully that was the theme of the entire presentation. And
But your three takeaways. You want 3 takeaways.
Yeah. So I would say, number one, you have to be mindful of your team. Okay. And so many people are dealing with things that most of us have no awareness of.
Yeah.
So I know you talk about empathy a lot. We all have to be really tuned in to what might be going on beyond the face that you see on Zoom in terms of their parents, their kids, friends, family, whatever. And so be mindful of trying to maintain culture, keep people engaged, included. That's essential. All of the new ways of engaging with consumers. So with your products, and I only say this because I still meet companies who are, and I mean this respectfully, their biggest priority is, how do I get on the shelf of Whole Foods? How do I get on the shelf of Sprouts or a supermarket chain? And what are they doing on Amazon? Or we're not on Amazon, or we're not on Thrive, or we're not doing direct to consumer. It's all omni-channel all the time. You have to be really thinking holistically and have initiatives across the board. Kind of goes without saying. And then I know you're going to talk about this next week, but cash management is essential. And when you were going through a period like this, where there's a lot of uncertainty, where there's a need to load up on inventory, people working overtime, doing all these other things, you have to have a tight handle on cash flow, understand what's hanging out there in the way of liabilities with trade spend, all the things that are going to impact that. Those are among the most important things, and among a lot of other topics.
Among a lot. Yeah, it's really hard. And a couple follow-ups, if I may, Gary. One is I really think the point on culture is so critical right now, trying to maintain that. And it's never too early, to, regardless of where you are in the life cycle of your business, to start thinking about culture. But Bob, you have that ability to look across so many brands that you've been around and served over the years and are watching now. What are the common themes? What things you need to do right now to make sure that you are nurturing, building culture and connectivity and team in this distributed kind of environment we're existing in right now?
Well, I mean, I would probably have to recap a few of the things I mentioned, which is, appreciate and understand what might be going on outside of work for the people on your team, while you're still not in the office. And for a lot of people, going to the office, which some companies have to do, where people go in once a week, twice a week, is pretty stressful because of that added risk of getting there, depending on whether they're going through public transportation or driving there, and then what they might be bringing back to their home if they've been, mindful of playing it safe. And so in that context, trying to get people engaged, over Zoom, whether it's some of the things I mentioned, town hall meetings, celebrations, stepping out of the day-to-day, not just doing updates on what's going on in the company, but we're going to brainstorm about this or that, or talk about innovation, or talk about some interesting topics. It's not easy by any stretch, but the more you can, again, be top of mind and not just be focused on how do we get stuff out the door is going to be essential here.
So part of it is just making it something you talk about and care about and
Yeah.
put voice to.
Yeah. And again, if you have ideas or builds from some of the companies you're working with, please share them, because I think this is a great topic for
No, I asked
everyone who's listening.
completely self-servingly, trying to extract them from you. Gary, can I throw a couple more in before we turn?
Let's do one or two more, because now we got some good questions coming in. So
all right, well, two. I'll pick two quick ones. One of the things you talked about is, and you know, we're in this group together, so we've talked about it a lot, but is the difference between just putting a voice to issues, you know, DEI issues and climate issues and so forth, and taking that to action, to actually making things happen, right? Any advice how to get that started? Because for a lot of people that's daunting, or they diminish their level of impact. They don't think they're that influential or have that big of a pulpit, right? But any kind of tips and thoughts about how they can convert those thoughts into action?
So I don't want to be trite and rely on bromides or anything, but there are no excuses. I mean, you just have to commit to doing it. And if you commit to doing it, you'll find a way. And again, whether that's, you know, bringing more diversity into your team or board or what have you, you just have to say, I'm going to do it. I mean, I mentioned the JEDI collaborative in our industry. There's Women on Board. There's other resources you can reach out to enable it, so you don't have to figure it out on your own and not get stymied. But it's really as simple as that, I think, is making that commitment and being, you know, authentic, that these are values we hold dear, and we're going to prioritize them, and we're going to commit to doing it.
Great. And then my last little question is, you also mentioned about the importance of getting help and knowing when to ask for help. But a question that I'm often asked is, you know, how do you know where to go for that help, and how do you know it's the right kind of help?
Well, I mean, everything is generally through your network. And so all of us, even an early stage company, can be part of a community like naturally Boulder, Bay Area, Austin, Chicago, San Diego, soon to be New York, and probably Boston. Up here in Boston, we have Branch Food. There's communities like that. There's your network of advisors. So people like us, your attorneys, your accountants, perhaps some of your investors, angels, family offices, and otherwise, and importantly, your peers. So even if you're not part of one of these communities, if you've been in a trade show, who are your neighbors, connecting with them. And then even brokers who, you know, I think having been in this business for a while, people love to gripe about brokers, but they're also an amazing resource you can leverage, because every sales and marketing issue you're dealing with, they've seen 200 times, with many companies going through exactly the same thing you're going through. And they probably have a good idea of who some of the other good service providers are based on the companies they're working with. And they're a nice nexus where everything is 1 degree of separation. So if you ask them, you know, who's happy with their branding agency, or who's just done a packaging refresh or something like that, you can get a lot of good input, but it's going to be mostly going out through your network.
well, and can I just, by way of going to the questions, Elliot, if it's okay with you, can I just go off that and say, you know, implicit in there is double down on your networking. I mean, that's exactly why we're doing this series right now. People need, you know, we're Lily Tomlin has this great line. She says, we're all in it alone, right? You know, everybody's suffering the same stuff. Everyone's got employees under stress. As you've been talking about, Bob, everybody's got, you know, absolute just a commanding, desperate need for diversifying your outlets, and we're all trying to solve the same problem. So obviously the Institute, you know, is one of those services. New Hope Network, again, has a whole series coming up in early March and ongoing on exactly this. But if you're staying in your shell, shame on you. This is not the time to be doing that.
Yeah, I'll just also add to that. Many of you are aware of BevNet and NOSH, the Specialty Food Association,
Right.
Plant-Based Food Association. There's the Upcycled Food Association. So there's a lot of groups and tribes and others that you can connect with beyond the ones that have been mentioned already.
Yeah, good.
And this is an industry of people that will gladly take a call and do what they can to help. The only way to not get help is to not ask for it.
Yeah, exactly. So look, we've got a lot of questions, and Elliot, let's just go back and forth. I'll start with one, and also Elliot, feel free to chime in. Let's just do this together. Well, right off the bat, you had mentioned a TikTok video. I believe you were referring to Elliot's TikTok.
I think I said blog.
Okay. Well, I think you said TikTok.
I said TIG.
Tig,
Talk.
Gary.
TikTok.
TIG being an acronym for the Intertwine Group.
Yes.
Okay.
TIG.
Gary wanted
But
to be
that
sure
would be
he knows.
hilarious to do a TikTok.
Yeah. So Sherry, that's what they're referring to. Okay. Scott Price, good to hear from you. Says, so getting slotting and free fill expenses transition to supporting digital programs is a must in these times. Any insights or suggestions to help make a convincing case with the larger retailers, either of you?
You're saying to get them to move away from slotting and free fills to things that are working programs?
Yeah, exactly.
Yeah, that's hard. And I would say, you know, the normal thing to say is sweet reason. You know, if you can somehow reach them with a strategic discussion about how you can grow the mutual pie together and how this is better for the long-term business for both of you than the short-term adrenaline hit of getting a free fill or a slotting fee. That's ideal, but maybe not always realistic. I would say for most people, I would prioritize retailers that aren't requiring slotting and free fills right now. And ironically and paradoxically, some of the best operators in the country are the ones who aren't requiring that.
Elliot, you have thoughts?
Yeah, well, I think you have to, for the first step, and that is just making sure you ask, and that you ask with a plan, and you can show them that that money would be better spent in a different way to generate for what they need, which is category gross profit. So the first way to have any hope of doing that is to voice it. And the other is to know your no's. I mean, if you're getting slotting and you're not getting the merchandising, you're not getting the price point, you're not confident it's the right retailer, then walk away from that and wait. So.
And the other thing is it offends our sensibility for many of us to pay slotting just in principle. But if you think about it as what is it as a percent of expected annualized sales, and when might you break even on it, it puts it in perspective. And you might be getting all worked up over something that might be 5% of first year sales, and then in year two it kind of goes away. So
and to add one really quick thing
context.
is also, I think, level set what success looks like.
Mm-hmm.
So make sure that you and the category manager, the buyer, set the same success metrics, velocity, whatever that velocity, what that hurdle rate is going to be, and so forth, and make sure that you feel that you have a chance of exceeding it.
Yeah. If I could just throw in a quick answer before I go to next question. We've all been saying it, you have to be multi-channel, right? I mean, one thing for sure across all the companies I'm involved with is if you used to be able to reasonably expect to get 6 SKUs in on, you're not going to now. It's just, you're not. You're going to get 4 or less or fewer. And so it just puts the real pressure on all of us to have other channels, other outlets. This is one of the reasons we'll have Infra and NCG up here, where there's a little bit, they're under their own constraints, space is limited in those stores, but they're looking for differences, points of difference than the big folks. And obviously, in the slotting calculus, when you get hit with ridiculous numbers like frozen with certain customers who we won't name, here, and you've only got 3 SKUs, you really got to make the decision. Is there enough surface area there to get an ROI? And usually the answer is no. So you got to, again, be diversified. Paul is asking, a lot of small players, restaurants, cafes, distributors have pivoted to direct-to-consumer home delivery, as you've mentioned, Bob. How much consolidation, in your opinions, is predicted? And do the little guys get hurt above the noise and resources of the big players?
And we're referring to on-premise restaurants and all of that?
Consumer home delivery. In other words, for example, Good Egg,
Okay.
Thrive, that we've had to get to different ways of getting to folks. And question is it likely that we're going to see consolidation in those home delivery systems? And how do little guys compete?
Well, everyone has to think about differentiation and how you do something better than your competitor. That's a basic for everyone, but we're probably sort of at the beginning of that curve where, as this becomes more widespread, there will be consolidation, as we've seen in this industry for a long time among distributors, brokers, retailers, brands. There's likely to be some consolidation as there'll be the need to be more efficient and bring down costs as the category gets bigger. So that's just economics. But right now you're already seeing like H-E-B, I think, bought Shipt, or was that Target? So the retailers are buying some of these home delivery places. Instacart's getting ever bigger. Thrive is a good but sort of distant compared to Amazon number 2. And there's a lot of smaller food and beverage people below them. I think they're all going to do well for a while if they're laser focused on differentiation and, doing a great job of servicing a narrower slice of the market, because they're not going to outcompete Amazon for a long time.
Elliot, do you want to look at any questions here? I can keep going.
Yeah, go ahead, Gary.
Okay, so if you make a product, Claire's asking, if you make a product that's eaten primarily away from home, like protein bars, how would you use the next 6 months until we get back to normal? In other words, and this is one of these, again, questions that really are challenging for little companies who weren't in distribution beforehand. So how you hang in there is really, I think, another way of asking it.
Yeah, no, it's a great question. And so, again, if you're not on all the e-comm players that sell bars, so that's not just Amazon and Thrive, but all of the supplement sites, Vitacost, iHerb, Swanson's, and many others sell bars, but also be using the time now to lay the groundwork for Q3, Q4. And so are you going to go into some other channels? If you're not in convenience, if you're not in chain drug, if are you doing club packs? So if you've been selling single units, can you do a 5 count or a 10 or 12 count in a box? Be doing all that stuff now, because the consumer usage is going to be down, but we do expect it to come back as people travel, go to the gym, commute, etc.
Elliot, you have thoughts?
Well, I mean, everything Bob said is spot on. The only thing that I would add is there are some times that there are things that you just can't do or can't control. And so one of them is to make sure that you're conserving and being smart and not just trying to grow despite the headwinds. And it's also a time for, we talk so much about innovation around product, and we talk so much around innovation around packaging, but your go-to-market and where you get discovered and how you gain traction, it can be a great place to focus your innovation. And so just think about going where people aren't going, where you're solving a problem, you're filling an unmet need. Where's that problem most pronounced? Where's that need most acute? How can you get there? And are those channels open to you that maybe aren't as frequently traveled, and maybe will provide some early opportunity for discovery now in this weird moment in time?
And also, you're reminding me that a couple of the leaders in the bar category, Kind and Cliff, have also diversified into granola, oatmeal, and other, sort of adjacent type categories. So not strictly bars right now.
Yeah. So our old friend Rob Wag, this is a question that, I think is on everybody's minds. So, remember in the poll, we had 1/3 have shown fantastic growth in COVID, 1/3 about the same, and 1/3 the opposite, right? So clearly Rob is in the first third because their sales were up 30% plus over the last year beginning in March, and they're now doing their budgeting for next year. So the question is it a safe bet to continue with similar increases? Now, obviously we don't know details, but what's your guys' counsel to folks? Is the second year of COVID going to be similar to the first, or are there watch-outs?
So I think from a common sense, a lot depends on your category. So I mentioned King Arthur got a huge surge in people baking at home. Their hope and expectation is some of those people have discovered the joy of baking and might continue with that. Maybe 10 or 20 or 25% of the people who tried it for the first time. But if you are in the canned soup category and you got a big surge in demand, that's probably going to recede to prior levels, I think. So if I was doing my budgeting for this year, which you probably should have done already, I'd be probably looking at what kind of trajectory you were on coming out of 2019.
He's doing, he's doing his 2022.
2022. I guess what I'm saying is, so I'd be going back and looking at 2019, 2020, 21, but basing it more on what trajectory I was on in 2020, as opposed to this like artificial bump I got.
Yes.
And, and again, temper that by the category you're in terms of like baking and like some other, a lot of people have discovered they love making restaurant quality meals at home, and they're going to do more of that going forward. A lot of this is sticky, but again, peanut butter, tuna fish, canned soup, a lot of that stuff might go back to its old levels.
Yeah. Yeah. Comment, Elliot?
Again, it's pretty hard to follow up Yoda, but I think
I was Yoda.
Yeah. No, you're Obi-Wan.
Obi-Wan. Yeah.
I would say the key, the key is just trying to think about it from the consumer. What's likely to be behavior that is going to be new behavior that's going to stick and stay, and what was emotional. The emotional behavior is going to lessen. So if your upside was driven by emotionality, you're probably going to see less of that. If your upside was driven by a shift in behavior that's likely to stick at some level, that's how I would look at it.
Well, and needless to say, if you are in the sanitizer business, Clorox wipes, things, as the pandemic recedes, they'll come back to their prior levels.
Yeah. I want to get to a question on trade shows. I want to just quickly comment. Something that we're seeing with a few of the brands I'm involved with are, because people are so isolated, right? And seeing their cat and their spouse and, the 20-year-old who's moved home was eating them out of house and home, but, not much else. Having human contact with a brand, I think, is probably more important now than ever. And when you get things in the mail, if there's a little note, by the way, it's sort of retail politics, right? Postcards, hand sign work. And I think a little note, let us know what you think. Just that touch says a lot to folks. And the follow-up even, how did you like it? Is there anything that we can do better, et cetera, et cetera. So,
yeah.
Allie's asking, and a few people have actually echoed this. What's your guys' take on trade shows? And obviously they're asking about Expo West, but also others, tabletops and so forth. In the best of days, it was a challenge to prove positive ROI for many of the bigger ticket events. Now this move to virtual shows that are still very expensive. Are buyers participating at all? How are buyers discovering and meeting with emerging brands? So comments on that investment?
Well, so the trade show industry has been disrupted, as much as any industry because of all this. So I'm sure the people at the Specialty Food Association, New Hope, BevNet, Nosh are all rethinking their business model in terms of how are they going to come out of it. I don't think anyone believes we're going to go back to 90,000 people in Anaheim in March. That's unlikely, or it's unlikely for a long time. So I think the expectation is there's going to be more hybrid events that'll have virtual aspects to it. I do think there's some pent-up demand to get back to engaging in person for that interpersonal, in-person interaction. And I know that the people who put these on are prioritizing how to get buyers there. And one of the questions is going to be is, will their companies let them go? So will the retailers, both the large grocery operators, the large national chains, be sending their folks to an in-person event, or are they going to sit out the first one or two? And then if that happens, what do these producers have in the way of matchmaking or speed dating, or things that might resemble aspects of ECRM or some of the other virtual events in terms of connecting. But I'm sure that's not lost on them, and they have to be thinking about all the various ways to do that effectively.
Yeah, and if I can add just a couple of things, I think you have to decide whether you're a early adopter, a fast follower, or a validator on this. You can wait to see if it pays. You can wait to watch some others toe in first, or you can just toe in. And the thing that I would say is think bigger picture of what your objective is in those. Yes, buyers are paramount, but so are just the connections that you can have, the ability to meet a Gary or a Bob and call them and ask for help, and the ability to connect with other founders, to be seen, to be heard, by not being conspicuous by your absence. This is an industry that definitely coalesces around its familiar, and I think there is a pent-up demand. So I think there's going to be some experiments. Some will work well, some will not. But if it were me, I'd be trying to allocate some dollars to make sure that I was there, because the brands that tend to succeed over the long haul, coming back to Bob and Gary's earlier point, are those that really build a network around them and can leverage that network. And trade shows, be they virtual, hybrid, or physical, are a big part of that build.
Yeah. It does not take a rocket scientist to recognize that there's going to be a new format for trade shows. I mean, there's been a change in leadership at New Hope, and in my conversations with them, this is obviously, like you said, Bob, this is clearly where they're looking and polling and looking for feedback. So I've got a bunch of questions here in the E-Comm area. I'm going to just try to sort of lump them together. And folks, we'll keep going with the questions until about 25 after here. So let's see, the question, sorry, just bump that. Okay, so one question is, how do you possibly stand out on E-Comm? There's so many. And also for BIPOC owned businesses, how do they tell their dual story? And I think the question is asking, through E-Comm. And then the related question is, sorry, I just lost track of it. My gosh. Okay. As we move into 2021, have either of you seen that growth in E-Comm channels has any impact on the discovery process for shoppers and buyers in retail? Do you see a relationship there? So how do you stand out, and is there any apparent connection?
Okay, I'll take a crack at, so the first thing I'll mention is on February 3rd, you're doing your session on do's and don'ts on E-Comm. So that would be a good session to attend. Secondly, this is another place to get help by people who are expert in this area. So there's all the perfunctory things around making sure your listings are correct, your images are current, the descriptions are optimized, you're investing in the right effective programs, etc. That's going to help. For any founders, BIPOC and others, there is a hunger among consumers to understand whose passion brought these products to market. So you always need to be telling your story. And whether you're doing it on the Amazon site, the back of your package, your storefront, no matter what, you want to be doing that as much as you can. And it needs to be authentic. And I do think consumers are much more tuned in to supporting BIPOC businesses and others. So that's important. And then in terms of discovery at retail, I don't have a specific, except I worked for quite a long time with Nut Pods, who you know, and
who will be speaking.
And far from distancing themselves from their success on E-Comm, they leveraged it, where they'd go to a retailer and say, we have 3,000 consumers in your trading area buying our product every month, and look at our 4,000 4.5-star reviews. You should be stocking our product. Now, I don't know if it helped with discovery for like tertiary items. They have seasonal flavors and things like that, but it certainly helped in terms of making the case for the retailer to stock the brand.
Yeah. Quick question. Is there a resource or published list of direct-to-consumer companies like Sunbasket, Good Eggs, Purple Carrot, Hungry Root, et cetera? Do either of you know? Is there any kind of directory?
No,
I'd go to the Google machine.
Yeah.
It's
a good idea to put one together, but not one that I know of.
Yeah.
Yeah, but you rattled off, Purple Carrot is mostly vegan. HelloFresh has a division called Green Chef, which is organic and non-GMO. I'm sure there's a short list of a dozen or so to focus on. And Good Egg is a little different in terms of the home delivery versus meal kits.
Yeah. We've got more questions now than we have time for, but Tucker asked, we're raising our Series A at the moment. What do you guys feel are the 3 most important things to communicate with investors, given the climate of COVID and the changes in the investment landscape? I think you spoke to a few of these, but top 3.
Well, this will sound dogmatic, right? It's being able to talk about increasing momentum and velocity, being able to understand your gross margins, and if they're not in the sweet spot, what's your line of sight to getting there? Understanding your cash budget. So when might you run out of cash, or when you're going to break even? Those are essential. And then talking about how your brand is a platform that will enable you to extend into other categories, other channels. When all is said and done, most investors are boiling it down to, can it scale and where can we reduce risk? And if you can, have that theme in mind as you talk about these other aspects, that's pretty important.
Anything you want to add?
And that's separate. I'm sorry, before you take a breath, Elliot. And that's separate from your deal terms. What kind of, do you have a reasonably sensible valuation, valuation, et cetera? And, or if you're doing convertible debt, are they sober, realistic terms and not wildly irrational and unrealistic?
Yeah, I'm going to quickly piggyback on that last one, because I've been seeing a slew of these. It's a different valuation world out there, folks. Investors have cash, but they're holding steady. If you have set the sort of 3x top line multiples that you enjoyed pre-COVID, you're not going to get them now. I mean, you're unlikely to get them. And if you're doing convertible debt and you're putting a valuation cap, Bob said it really well. I mean, if you must have the capital, and of course most of us must have the capital, set something realistic. It cannot be greedy. You're just, you have to measure the value of time not having the money. And if you set it too high, it's going to take a long time. And the other thing is, be entrepreneurial. A lot of investors are willing to reward achievement, set a valuation based on one set of goals, and maybe in discussion have an understanding that if you beat them, maybe you can up that valuation or raise that cap. But don't be crazy greedy right now, because the time has changed. Elliot, do you want to add anything there?
I'll add two really, really quick things. One is, you need to show the investor that you understand that they have the right to make money. What's their path to monetization, right? So, and a lot of times, and more so now than ever, that's got to be top of mind for an investor. It's not a question whether I'm going to invest, but why should I invest in you? Why do you offer me the best chance? So I think that, and then the other bell that I consistently ring is capital efficiency, which I saw a question on, which I operationally define, right or wrong, is basically for every dollar you deploy, it returns what amount, how many dollars in contribution margin. So, being able to prove that you are capital efficient, that the money that they're going to invest will get you further than if they invest in another brand, is critical.
Yeah. Joel asks, on that comment, as a percentage of revenue, what would you expect a double-digit growing sub $10 million company to be carrying in terms of working capital?
It depends. It depends. That's
why you need a cash budget.
Yeah. It depends on so many variables, receivables and how much inventory you're carrying and so forth. But I'll answer it personally with a very technical one, which is as much as you need and as little as possible.
I'll just say quickly, we're going to get into capital efficiency tactics next week, but in the chat earlier, somebody mentioned the handy Hirschberg Institute weekly cash flow pro forma. Whether you're raising or just managing, that's still live. And maybe Caroline, we'll put a link up afterwards and tie it to this webinar series. But I can't tell you how many companies have found that tool critical to getting through this period, because there is so much cash wackiness out there. And what I would say, in terms of pitching your Series A, is more than anything, the investors want to know that you've set realistic targets and that you've got a track record of proving that you've beaten them. So if don't set wild ass goals you're not going to meet. That's the quickest way to lose their interest. Let's see, we have time for probably one more. And there's so many, but here, since you'd gotten into mission and climate and diversity and the other sort of relevant topics here, Bob, let's go out on this one, very apropos for today. What are your thoughts on whether a brand can remain apolitical in today's environment? It's a really good question. I have thoughts, but do you guys want to?
Yeah, I think you can understand the risk. I think I boil it down to, you have to be authentic. You have to be true to yourself. And if that means speaking out when there's a need to speak out, you should, and recognize there'll be some blowback. You might lose some customers, but I think it's more important to be true to yourself than neutral or apolitical.
Yeah, and I would say first of all, we've talked a lot about this. Bob and I have, we influence some 50 million consumers, so we have a pulpit as an industry, and we shouldn't be afraid to use it. But part of using it isn't always just having to show up and speak to your opinion. We're also, as brands, we want to invite two-way conversation, so we can be a great repository for listening. We can just show up and listen. If you don't have a stake to put in the ground, but you have a genuine interest in the issue, show up and listen as a brand. Invite the conversation in. But I think being silent is just, it's a wasted opportunity, in my opinion.
Indeed. And, let me bring us to a close on that by saying there's a difference between being political and being partisan. And, political, capital P, I don't think, Bob said it earlier, we have a climate disaster made only worse by the last 4 years. In my, that's fact, that's not my opinion. Brands, people are looking for brands that are trying to be part of the solution, whether it's environmental, whether it's, the discrimination, whether it's opportunity, whether it's education. Use your judgment. There's ways to be very activist out there without having to align with one or another party. And I think people appreciate companies who care.
Mhm.
Bob, I want to thank you. Elliot, thank you for a discussion that we really could have kept going for another couple hours. There's actually many more questions than we were able to manage. But let me try to summarize a couple of key points, as I want to do here before we wrap up. Bob was talking on that last point about walking your talk. People want to know, they want to be connected. They want to feel a connection. They want to feel there's someone really behind it. Set your goals out there. And this is, of course, internal with your taking care of your people. You can't get anywhere without the folks who are home, recognizing that they're struggling as well. Walk your talk with your people, and then, walk your talk with your consumers and your customers. Conserving cash, how many more times do we have to say it? But if there was ever a time for it, there's always a time for it, but this is certainly the one. Ask for help. Both Elliot and Bob have stressed this. There's no reason for you to be sitting there trying to solve a problem by yourself. There's too many of us out here. Bob and Elliot have both mentioned different groups. You see a lot of links. Others in the chat have offered their resources. Recognize that you are not going to get all your SKUs out there. Okay, set realistic targets. It's just a different kind of world than it used to be. And of course, also recognize that you've got to be realistic on setting your capital goals as well. Investors are justifiably wary and cautious, and they're not placing the big bets like they used to. And finally, and Bob stressed this at the beginning and at the end, so I want to stress it at the end, always be telling your story. Lots of people ask questions, how do I stick out, whether it's on e-comm or retail? And of course, in coming weeks, Carly, maybe you could put up the schedule here, at least for the rest of January. In coming weeks, we'll be talking to a bunch of different customers. We will talk to Infra, NCG, UNFI. Later on in our series, we will be talking to Costco. We'll be talking to Thrive. Next week, obviously, we have Elliot and Ashley speaking about cash efficiency, but the following week, as Bob mentioned, we've got a couple of fantastic presenters on e-comm do's and don'ts. So we're trying to be responsive. If you've got other topics that you would like us to cover, by all means, let us know. Clearly, Bob covered a huge array of, as I expected and wanted, a huge array of concerns as we look ahead to 2021, and we'll try to drill into a whole bunch of them. But again, Wednesday, end of Feb, telling your story and gaining discovery, which many of you asked about. So I hope you'll join us. Please, if this was valuable, pass along the word to others to join us. We'd love your feedback. As you can see here, you can sign up for our emails, send us your feedback. And also, like I said before, if you have a interest in pitching if you are raising, whoever that was who was going with Tucker, you're doing your Series A, feel free to summarize your pitch and put it up on our website portal. And again, be on the lookout for educational offerings from New Hope, from TIG, from Bob, and of course, from the Hirschberg Institute in late April. With that, let me again thank our speakers, our speaker and our panelists. Elliot, we will see you next week. I guess we probably should get you on, Bob, to put the questions to Elliot. So we
Happy to.
Turnaround's fair play here. And of course, I want to thank Carleen behind the scenes here, who makes the whole thing happen. So Folks, thank you. Have a great week, and we will see you same time next Wednesday. Take care. Bye-bye all.
Thanks.
Thanks for having us.